Hi everybody, it's FIBO Group, and you are watching to the Market Watch Review. Despite reports of high activity during the holiday period, the reopening China's mainland market was slow. The CSI 300 saw a decrease of 0.5%, while the Shanghai Composite saw a decline of 0.2%. Expectations of rate hikes by the Federal Reserve, European Central Bank, and Bank of England have seen equity markets tumble today. Stoxx 600 in Europe, which rose 0.7% over the last two sessions, is now 0.6% off. U.S. futures are also trading at a sharply lower level. The euro is the strongest currency market player in the G10 as it attempts to again establish a foothold over $1.09. The Australian dollar was the strongest performer last week, but it is also the most vulnerable to profit-taking. March WTI lost an initial weekend amount, but it has since recovered to $79.60. Asian Pacific market. China may ban cutting-edge technology that is used to produce solar wafers. China's efforts have led to a drop in the price of solar power by around 90%. The US, EU, and other countries are working together to increase domestic capacity in their efforts to break away from China. The dollar continues to trade broadly in the opposite direction of the Japanese yen, with the JPY 130 region being the middle. Before falling to $0.7070, the Australian dollar fell by a third of a day before recovering in the European morning. Market of Europe. Sunak gave in to increasing parliament pressure over the weekend and fired the Tory party leader and minister without portfolio in his government Sahawi. He was referring to ethic rules rather than taxes. Germany's fourth quarter GDP was disappointing. While the preliminary estimate was flat, today's report shows a 0.2% contraction. The third quarter GDP was revised from 0.4% to 0.5%. Session lows of $1.0855 in late Asian turnover were recorded by the euro, but it rebounded well in early European turnover thanks to the hawkish impulses triggered by the Spanish CPI figures. Sterling is stable, trading at $1.2400 in Europe's morning. Market of America. Slowly, the U.S. key week begins with the Dallas Fed's January manufacturing survey. Tomorrow's feature will include house prices, consumer confidence measures from the Conference Board, and the fourth quarter employment cost index. Tomorrow, Canada will release its November GDP figures. Support is near CAD 1.3300 for the US dollar. This is the lowest level since November's middle. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.